if you found a great deal that somebody outbid you on, please follow up every week until it either closes or the agent tells you it's getting shaky. Because I promise you, most of these agents have spent that commission check and they will want you to come in with a solid backup offer at your number. And then they will start telling the seller, hey, this buyer's kind of quirky, but good news, I took care of you. I got this next one. It's a little lower, but it will close. One of the things that you will undoubtedly start to think about when you get started in real estate investing, maybe after year 3, maybe after year 5, heck, year 8 is, hey, I have all of this equity sitting in some properties. What should I do with it? Should I be Dion and just leave it there? Should I do what Zuber did and kind of cash out refi? Heck, should I 1031 from a small asset to a big asset? These are real conversations and real questions lots of investors have. So we're going to talk to Lisa and John about their specific situation. We're going to dig into details just a little bit and see if we can't help them and hopefully help others that are thinking about how to leverage dead equity. Lisa and John, thank you for being here.
Yeah, thanks for having us.
Awesome. Why don't you do me a favor? First, introduce yourself to my audience, who you are, what you do, where you're at, how long you've been doing it, and we'll get into the conversation.
Okay.
You go first.
Okay. So I'm Lisa Moore. We live in Salt Lake City, Utah, and the majority of our portfolio is here in Salt Lake. We have a property in Colorado, and then we're LPs on a property in Raleigh, North Carolina as well. My background is financial analysis. I was an analyst for over 15 years in the corporate world, retired from that in December of 2021 and been doing real estate full time.
Congrats.
Almost 3 years now. So, and our portfolio consists of 20 doors of small multifamily that we manage plus our LP positions. And yeah, we're just looking to figure out what to do with the equity in our property. Salt Lake has boomed and appreciated, and I look at our return on equity and it's not the prettiest of numbers. So
there you go. Well, just so we're clear, Lisa, when you say small multifamily, we're talking duplex, tris, quads,
2 to 4 units. Yep.
Okay. All right. So all residential, all 30-year fixed rate debt, all normal things. Okay, cool. All right.
Yeah, I started in real estate in 2004. I was living with my grandpa. I didn't want to pay any rent, so I figured I'd buy a house and house hack it, which back then.
Wow, 20 years ago, you're a rock star. The original OG.
So, yeah, nobody called it that back then.
No, yeah.
But and then I got I was a painting contractor to pay for college and decided I was sick of that. And anyways, long college, off and on again career, didn't quite feel like I fit anywhere. So I actually did finish my degree when I should have been buying deals in 2009 and 2010. Yeah. But I managed to get one in 2007, a great deal, another one in 2009, and then just kind of sat on those 3 properties. Including the original one I bought. And now those have been what we've been leveraging the last handful of years.
Okay.
Yeah.
The equity in those.
And we still house hack. The house we live in now, we rent out the basement. So
respect. I mean, a lot of people are sleeping on house hacking. Again, house hacking doesn't actually mean you have to have roommates. You can create separation. It's a secret. It's a secret weapon. It just is.
Yeah.
Yeah, I got rid of the roommates pretty quick. I built out the basement and put them down there, and
we got along a lot better. Go over there. You're loud. Go away.
Yeah.
Very, very cool. All right. Well, let's set up the situation. So it's it's almost 2025. This year has flown by. What are you? You're sitting on a lot of equity. It sounds like, again, the return on equity is pretty low. What are we looking at today?
Yeah, I mean, so realistically, we have close to $3 million of equity in our properties.
Okay.
We're only about 35% leveraged.
Oh, wow. Okay. All right.
So we are in process actually on a couple of the properties doing a cash out refi right now.
Mm-hmm.
And then we have one other property we bought last year. It's at an 8.325 interest rate. Mm-hmm. So that one we want to refinance next just because we can get the interest rate down and be able to keeping us the same payment. We'll be able to pull money out and keep our same payment just because our interest rate's going to drop.
Yeah, that makes total sense. Again, what she's really highlighting there is, if you happen to be purchasing in call it 2023, maybe early 2024, and you have an 8% investor loan, if you can refi that down to 7, there's a good chance you could take out 20, 30, 40 grand and your payment doesn't move. So that's really
Yeah.
what Lisa's highlighting there. So that makes total sense on that property.
Yeah.
I like that. So what is the plan? So let's say you do these cash out refis, and I'm just going to pick a number for easy math. You got 200 grand sitting in an account somewhere. I'm guessing that's both of you see that as investment capital. That isn't, hey, let's go take 10% and blow it on a trip to Vegas or anything.
No.
Maybe 1 to 2%.
I like that. You got to smell the roses at some point. I can respect 1 or 2%. I like that. That's good.
But yeah, no, most of it, like when we do a cash out, yeah, we look at that as that is money to invest. And now it's, finding the deals to invest in. But I sort of go back and forth on like, do we sell some of them to get all of our capital and be able to reinvest it? Or do we do the cash outs, keep the properties we have? Because in Utah, we're within an hour, all of our properties within an hour of Salt Lake. And the appreciation in Salt Lake is huge. So part of us like hates to sell those because we know that they are going to appreciate, but it's what's the best use of our equity and what's the best use of.
Yes. So tell me about the cash flow. Tell me about so just pick one of your properties. Before the refi, what was it roughly cash flowing? And then what do you think it'll cash flow after the refi? Just pick one of them.
So our Edison one right now, our NOI on it, I have that.
I like it. Spreadsheet. She's a financial analyst, so it's 15 years.
She does all the stuff I can't stand.
My wife does the same, so I respect.
So our NOI is about $4,400 on it.
Okay.
So honestly, like we want to pull out as much as the banks will let us. So we're doing a DSCR loan on this one. So the debt service coverage ratio.
Sure.
So however much they'll let us pull out. So whether that's a $2,000 payment or $3,000, whatever it is, because the way we look at it is, yes, that debt is against that property. And I'm curious your thought on this. Like, so the debt's against that property, but if we have an additional $3,000 of payment, like when I'm buying a property and if we're using all of that equity, I look at that $3,000 against that new property, because the way I look at it is I wouldn't be able to buy that property without that debt. So even though it's really against, property one, our new property is how I look at it and say, okay, will this actually be able to cover that debt as well? Because that's why we're taking it out.
Yeah. So I don't know. You're probably not going to like this opinion, but it is what I think. So obviously he's a numbers guy. That's kind of how I told myself in the beginning, right? When I did a cash out refi of Norris Drive, which is my first property, and I've talked about it in my book. That's exactly what I told myself. All right, I'll take Norris Drive. Pick a number, 40 grand. That 40 grand became Ferris and Clinton, right? The two other properties that I had. And I always told myself, hey, if you put them together, I'm good. But after 3, 4, 5 months of looking at Norris Drive and having to write, a $1,400 mortgage when the rent is $1,100, that gets pretty annoying. And again, at the end of the day, when I look at my portfolio, having gone through the Great Recession, right? So I've been doing this since 2002. Believe me, when stuff starts hitting the fan, you're going to look at Norris Drive or at least in my case, Norris Drive as a standalone asset, and it's going to suck every time. So I like each asset to stand alone is now my preferred goal. Yeah. Which I didn't have then.
Yeah. And the ones that we're doing cash outs on will still cash flow and will still.
Oh, good. Okay.
Yeah. Yeah. We're not taking out to the point where they would be losing money. So they'll still cash flow on their own and still.
Okay. Good.
Stand alone.
Yeah. The DSCR kind of prevents that, as I understand it.
Yeah.
DSCR loan, debt service coverage ratio. Some of them you get all the way down to 1. Most of them are about 1.25. So yeah, the DSCR will help cover some of that. Yeah. Okay. That makes me feel better. Okay, good. So yeah, I have no problem. And again, where I go back to is, are you in growth mode or maintenance mode? Now, either mode, you're still growing. It's just in growth mode. It's more gas than brake. And, assuming you're in growth mode, which it feels like you are, I have no problem with the strategy you're doing. right? I would do one at a time versus maybe doing multiple, it sounded like, just because you don't know where rates are going. That might be one tweak is do one cash out refi at a time. Because you just never know where the deals are coming. One of the things you don't want to do is you want to take your debt up if it takes a long time to deploy the capital. So some of this is about how soon can I get another great deal? Because that's where this is where we're going. We're in a buyer's market. There's no question. Demand has fallen off a cliff. I think rates are going to be higher for longer than all the experts think. But that just means the pressure is building on sellers. Some sellers have to sell. And it's our job as investors is to go seek them out, find them. And you only can do that by writing lots of offers, having lots of conversations, and lots of follow-up. So the long story short is I would not be in a rush to extract maximum equity from multiple assets. I would do one at a time and then deploy capital appropriately.
Yep. Yeah, we have had a lot of frustrating days of being like, why am I doing this? Because looking at so many deals and underwriting so many properties.
So many crappy deals.
Yeah. But
yes.
And one of the reasons we're motivated now to pull it up, because I do feel like we are starting to see like stuff sitting on the market longer, stuff
it's coming.
It's starting to move more.
Yes.
So we're like, okay, it seems like it's starting to finally loosen, and there might actually start to be more movement, because I think sellers are realizing, like, if I actually do want to sell, I'm not getting the prices of 2-3 years ago. And I think we finally are starting to realize that. So we're starting to see that. So now it's like, okay, if we can have some capital to be able to jump on some of these properties as we start to see things, that's kind of where our mind has been going with it.
I want to encourage you, both of you, to keep doing the work. I've been doing this a long time. It is coming. It never comes as fast as we want. But I will also tell you the rewards are even more than you expect. The deals that you'll likely get done in 25 and probably 26, because this, if I'm right, it's never fast, but it takes time. These will be deals that you're set up for a long time. So I would encourage you to keep going. But that's also why, like, if I had 10 assets, I wouldn't go extract 8 of them to the max, because I just don't know when the opportunity is going to come. Does that make sense?
Yes. Yeah. Yeah. The third one that we want to do cash it on, our thought was like, well, wait, see what happens come the springtime and kind of go from there. And we know we can get it done in a month. So,
yeah, 3 to 4 weeks, DSCR loan.
Yeah. So
I think something that might be relatable for your audience, something that I've gotten a lot of value from watching, I don't know how many hundreds of hours of your content, is just kind of a sanity check, because we're seeing the overpriced deals and people are buying them, and they just don't work for us, not even close. And it's like, who's the idiot? Are we the idiots for not buying those, or are they the idiots for buying those?
Oh, yeah. In most of the cases, they're the idiots. Because again, one of the things that people don't understand about, one of the things that people don't understand about real estate investing is it's a lot like stocks or crypto. Is once the momentum starts coming, the dumb money follows. And it takes a while for the dumb money in real estate to kind of wear itself out, because there's going to be thousands, probably tens of thousands of LPs that unfortunately have to realize their money's gone. It's just gone, right? The equity's completely wiped out. In the residential space, as you guys know, it's not as quite as dire, because they have lower mortgage rates, so they can limp along longer. But that's, life happens. And the longer rates stay at 7 or above, just every week, every month, every quarter, the likelihood somebody goes from want to sell to need to sell goes up. And once you make that jump, opportunities happen. It takes time, and you're doing the right thing, writing lots of offers, underwriting lots of deals, staying disciplined, which is hard.
Yes.
But I want to encourage you, you're doing lots and lots of the right things. Keep it up for sure.
Yeah. And you had mentioned on one of your podcasts recently on like your plan of even maybe for your portfolio, potentially selling some of those smaller assets and trading up to some larger ones.
Absolutely.
And that's definitely something that we kind of have been thinking. Like, I think we have a couple properties we wouldn't want to sell just because of where they're located here in Salt Lake.
Sure.
I just think that like the appreciation is just to like, I'll leave some equity in that property because I know the appreciation is going to be really good.
Nice.
But we definitely have a few that we're looking at. I'm like, yeah, we would definitely probably sell these ones because I do think that opportunity is going to be coming and be able to trade up.
Yeah, what I would do because right now your experience is 2 to 4s, I would probably take 10 to 20% of your cycles and start the process of looking at 5 to 40s. I would just start that.
That's almost everything we're looking at now.
Okay, good.
Signed an LOI this morning on an 18 unit.
Yeah.
There you go. There you go. Yeah. So let me set. Nice. You guys are great. Thank you for all of
reading
this.
your books and listening to your YouTubes.
Awesome. I appreciate it. Well, let's set it up for the audience in case they're just catching this for the first time. So what again, unlike you're in growth mode. I'm in maintenance mode. Let's just be honest. I'm not running the gun as nearly as much as I was 10 years ago. That said, if you're going to give me millions of dollars, I'm going to take it. So let me play the dominoes out, how they might fall. Step one, the new administration comes in and encourages first-time home buyers by some type of grants or free money or something, right? We frankly don't need more demand. We need supply, but let's just say government does what government does and we get free money for more demand, okay? I happen to own a lot of entry-level housing. Entry-level housing is like Bigfoot, right? You think they're out there, but nobody ever sees one. What's going to happen with all this free money first-time home buyers is it's going to dramatically increase demand, which, of course, if you know lots of demand, no supply, prices go up, definitely at the low end. So in theory, a $25,000 free money could increase value in single-family homes on the low end by 10 to 20%. It's just math. It's very easy to see that coming. So that's step one. If demand goes up 10 or 20, and it'll probably take 18 months to play out because, again, it's never overnight. But what will happen at that point is, just like my book, One Rental at a Time, I think single-family homes will be crazy overpriced at that point. Crazy. So what I will do is I will start selling my 1s, 2s, 3s, and 4s. And just by happenstance, just like last time, I suspect the 5 to 40s will start crumbling as more debt comes due, as more syndications blow up. And, I just saw Ken McElroy, shout out Ken McElroy, just bought a Class A apartment building in Henderson, Nevada for 33% off. Folks, if Class A is selling for 33% off, Class B and Class C could sell for 50% off once we get there. So if the dominoes play out like they might, single family might get an artificial sugar high bump in 18 months to 2 years, while commercial starts to crumble in a year or two. And if that happens, I'm not saying it will, I'm just telling everybody out there, if it does, I'm going to pick a number, 30 single family homes, and just like last time, do a 10 to 1, and I'll end up with 300 multifamily bought at a discount with none of my own money. It'll all be equity. I'll have to put no money into the deal. So that is absolutely what is possible. I'm not sure it's probable yet, but it is certainly possible. And if it happens, I'll be a happy camper.
Now with those the only single family we have is our one we live in, but the rest of ours are just the 2 to 4 unit. But with your debt, do you care that you have, because we've house hacked majority of our property. So we have owner financing on a lot of them. So we have some really good interest rates. Mm-hmm. And some people I talk to would never want to sell that interest rate. But the way I look at it is if I can trade up, I don't care if my interest rate goes to 8%.
Don't care.
If I can trade up, to me, that's still hugely beneficial than just because I have a 3% interest rate on my property.
I do. I own some of the stuff I sell has 0 interest. Absolutely sell. Right. If you're going to hand me, I don't know, pick a number, $30,000 a month cash flow for the rest of my life, do I really care that I gave up one asset at 0% interest rate? No, at the end of the day, I'm trying to play a game for cash flow. And if I could really make the jump again, 30 houses to 300 units, which was, I went from 8 to 80 last time. I'm better today than I was then. But let's just assume the same ratio. I don't care about, no, if that asset's overpriced, I don't even care if I own it free and clear, right? I'll take all the equity into the next asset. So no, no, if I'm going to do this trade, that asset's gone. It doesn't matter what the interest rate is.
Yeah, that's definitely.
Yeah, I think I see a lot of people, including myself, you'll zero in on one aspect. Maybe it's the rate, maybe it's the fact that it's a fixer-upper. I see a fixer-uppers going for top dollar around here. And
Wow.
I think people think, oh, it's a fixer-upper, it must be a good deal. And we're actually running the numbers, and they're horrible deals. I'm like, I like to work, but not enough to do it for free.
I don't want to work for free. Yeah, don't do that. Don't work for free. Yeah, again, there's lots of dumb money. There's lots of lazy money, right? One of the things that we probably will see, is just, there's a lot of stock money going on. There's I live in one of my houses in the Silicon Valley, a lot of NVIDIA money and AMD money and Google money and all of that. Sometimes they're just lazy and they just, they want to buy a deal just to buy a deal. I think that's a horrible strategy.
Yeah, especially if it doesn't make money. And that's it's a hard, for us right now, when we see people buying properties, it's really hard to not get frustrated because it's oh, well, this person's buying it. And I look at it, I'm like, how do they make those numbers work? And I always have to tell myself, okay, this is how we underwrite. This is what we need. This is what our deal, this is our criteria. And that's what we have to focus on. But it's so hard when I see people buying deals and I'm like, how are they paying that? Because there's so many that I've made offers on and they go for asking. I'm like, I don't understand how somebody is making those numbers work. But I'm like, I cannot put myself in the mind of someone else.
Again, I'll just tell you what I do. I just call it dumb money and I just move on, right? It happens all the time. I'm outbid 99% of the time. Right. Even when we were running and gunning and I was writing, 10, 20 offers a week, most of the time I'm outbid because again, what we do and what I talk about is I only want great deals. Anybody can do an average deal. I have no interest in an average deal. I'm comfortable doing one deal a year, 2 deals a year. And it takes work. It takes follow-up. It takes getting lucky. One of the things that I found to be most beneficial is when somebody else overpays, I actually put it on my spreadsheet. I called the listing agent every week. If I really liked it, maybe every 10 days, it was so. I would just call them every week to 10 days and say, hey, did it fall through? Did it fall through? Because some of these people don't close. And then what I want to do is go to that agent and have them take my offer before putting it back on the market. Because again, most of the time, these agents have already spent that commission check, right? So again, sometimes it's following up on deals you've lost. I would probably say, from 2010 to 13, my most active years, 25 to 30% was that strategy, was just follow up. It's a 5-minute conversation. Hey, 123 Main Street, I was the second place for this. Just curious if it's going to happen. I like the house, blah, blah, blah. And again, the first time you follow up, no, they're always going to tell you, nope, solid deal. But by following up every week, they'll remember you. And then they'll say, wow, this person's really serious if the deal starts to fall apart.
Yeah, I feel like there are more deals falling apart now and seeing more stuff coming back on the market.
It's a sign.
And not closing.
Yeah, but again, hear me. I implore you and the audience. If you found a great deal that somebody outbid you on, please follow up every week until it either closes or the agent tells you it's getting shaky. Because I promise you, most of these agents have spent that commission check and they will want you to come in with a solid backup offer at your number. And then they will start telling the seller, hey, this buyer's kind of quirky, but good news, I took care of you. I got this next one. It's a little lower, but it will close. So please, take your spreadsheet, which I'm sure you have, and star the ones that you've lost that you really like. And please start following up on those.
yeah, timing for that advice is like perfect, because just in our neighborhood, we're looking to eventually not house hack anymore.
Sure.
And there's a house in our neighborhood that I've been following up on and will continue to follow up with.
Perfect. Yeah, it all takes work. It's not hard. It's just a lot of people are lazy, which you two are clearly not lazy, but a lot of people are. It's like, oh God, I gotta, like, if you come up to me and say, Michael, I wrote 5 offers and I haven't got a deal yet, I'm gonna be like, call me back when you're at 50. Right? They just don't understand the scale. But the other part of this is a lot of the money is in the follow-up. It really is in real estate. So I encourage you to do that.
A few of the properties we bought have been on follow-up. Like we have a triplex that
we find them when they're pending already.
Yeah.
And
I like it.
Yeah.
Yeah, because most people won't do the work. That's, again, if you could just do a little bit different than most people, your opportunities of success go up. So congratulations. I love it.
I think a lot of people immediately give up when they see a listing that's showing pending.
Yeah, it's not active. I lost. No, that's not how it works, guys.
No.
Yeah, especially now.
Yeah. Oh, yeah. And it's only going to get worse. Yeah. I think it gets worse from here.
That's not that we want things to get bad, but that's kind of what we're hoping. So
yeah, silver lining. It's good. This next 12 months, 18 months might be the best time for the ORaaT family, because again, we just preach focus, daily discipline, follow-up. And I'm already seeing it. I talked about Renee this morning. You know, she lots of follow-up, lots of this, lots of that. She ended up getting a property that was on market for 30% off. You know, it takes time and follow-up. So
yeah.
And even though the market's not really favoring us yet, I think the fact that we have been looking and have really been combing through all these listings,
you could see the tide turning, right? You can see
we're gonna be able to spot a great deal
months before anybody else.
Yeah,
exactly.
Yeah. And building the relationships. Like I have talked to so many brokers, and it's funny because like so many of them at the beginning of the year, I would, here's my LOI of what we do, and they're like, no. And then like now there's 3 properties that I keep getting the email for. They will not drop the price. And I'll follow up with the agent. I'm like, are they willing to like come down? And he's like, nope, they're still not willing to budge on their price. But I've built so many relationships with so many agents now. And like throughout this year, just continuously talking with them, it'll be interesting. Like once there's some sellers that are getting more motivated and like, okay, if I want to sell, then I really need to actually like be realistic on my price. Yeah. Like my hope is that those agents, because I get a lot of agents following up with me now with, hey, are you still interested in this one? This is what's going on. And it's
you are doing so many things right, Lisa and John. I just want to encourage you, pat you on the back, give you a hug. This is exactly what it takes. This discipline, tenacity, being a good person. Right. One of the ORaaT rules is meeting 2 new people a week. Just keep doing it. Keep growing your network. Keep following up with the folks. Trust me, when this breaks, people will bring you deals, and they'll be good deals that you probably negotiate and make great deals. You're doing lots and lots of the right things. So congratulations.
Thanks.
A lot of it's just minor tweaks too. Like I'm not like you. I don't love looking at the MLS, but I know if I do it first thing in the morning before any social media, it'll get done. And that's just kind of a little tweak that
know thyself. Yeah. Again, you've got to do it. I don't know why. I'm just weird, broken, whatever. I'm already excited to look tomorrow. Like you, I've already looked this morning. It's just, I know there's gold there somewhere. Yeah. It's just my job to go find it.
Yep.
Yeah. And there's definitely some frustrating days, but overall it's like, we know it's coming. We know it's going to pay off, but
and you're seeing it. Let's not sleep on that. Right. That's the whole point of doing this daily, right? If you were just going to do this on the weekends, you wouldn't see it. You wouldn't see stuff come off, come back on. You wouldn't notice the different conversations. And it's just like a tide. The tide is undoubtedly going out. A lot of sellers don't recognize it yet. A lot of agents don't recognize it yet, but trust me, they will. So just keep your discipline, keep your focus. Congrats.
Yeah.
Yeah. Another 2 cents on that. So Lisa's an agent, so we can look and see what places are actually selling for. Utah's a non-disclosure state, so we don't know what things that are actually selling for. We see them go pending, and then who knows what they actually sold for. So going back, watching properties in many cases for months at a time,
Yeah.
Finally going to contract, and then seeing what they actually end up selling for is really helpful for us to see what our market's doing. But even buying the best deal in Salt Lake, like we found the cheapest fourplex in the valley. It was like 500 for a fourplex, and the numbers still didn't work, despite it being the lowest priced fourplex. I mean, they're 800 to $1 million all day long out here.
Wow.
And even at that price, across the street there was a nicer, newer apartment building, and the rents were higher and or lower, I guess. So the numbers just didn't work, despite it being the best deal in the valley.
Yeah, there's a lot of dumb money out there. Maybe a house hacker bought that one and they lived in one.
Yeah, it worked for them,
Yeah, or somebody like talking to a lot of brokers, like I'll ask them like, who's buying these properties? Like where, because there's a couple brokers I work with that are also investors, so they really understand things. And most of them are saying like it's people with 1031 money who are getting to the point where they need to spend it, or they're people that have been sitting on money in the bank and they finally would rather have it sitting in an asset that breaks even and appreciates in Utah than what they're getting in their bank account. So it's like, it's not really investors like us buying right now. It's like, there's a lot of investors here. I mean, there's a lot of investors everywhere, but here in Salt Lake that are like, we haven't.
They're just parking. They're just parking their money. Yeah. It's, again, I've seen the movie. You're doing the right things. It will pay off. Just a couple of tweaks on follow-ups on pendings and like you guys are doing. Yeah. Don't be in a rush to extract because again, it takes time. Do one at a time, but yeah, I love what you guys are doing. Congratulations.
Thank you.
Thanks.
Yeah.
Where are you moving these days?
So we picked up my new primary home according to the IRS in Vegas. So I don't pay Uncle Gavin 15% of my money anymore. So that's pretty awesome. I'm looking to prove I could do one rental at a time in Nevada. So that's what I'm doing every day now, is trying to pick up a house. My buy box is single family homes, non-HOA in Henderson, on a lot where I can add a casita. Like it's ADU. They call them casitas here. Yeah. So again, cash flow is crazy here, right? There's no deals, but that's, I spent 6 months researching, so that's what we have to find. We got to find probably a fixer upper, probably on a corner lot, on a decent city lot where I can add a casita. That's my Rubik's Cube to fix now.
Now, is it easy to be able to add that? Like Salt Lake actually just either has passed or is in process of passing, like being able to add an ADU. This is only if it's your primary residence. Right. They haven't switched it to investors yet, but like you can add an ADU. And in Salt Lake, I'm not exactly sure if it's just Salt Lake City or what, but they've actually approved like any lot can be a fourplex. It has certain things it has to hit,
right? But
essentially, like you can turn any lot into a fourplex.
So
a lot of the rules and restrictions still make it hard to do. So is it similar in Nevada? Is it difficult to add a casita?
So again, I'm researching all this in real time. So in Las Vegas, you have to be an owner occupant. In Henderson, again, I'm working with one of the builders out here in Henderson. Apparently it's not a requirement to be owner occupant, but if you're in Las Vegas proper, you have to be an owner occupant. I'm still verifying that you could do it in Henderson, but that's what I'm being told. Yes. So relatively easy. And there's somebody I interviewed for my series Buying Vegas, Picasso Homes, that has 2 ready build models. So I'll just pick one of their models and say, go build that. So very much still learning, but I'm encouraged by what I've learned so far.
Yeah. Yeah. Being able to add, I mean, that's, one of the reasons that we like the smaller, like he's like the MacGyver of houses of like, how can we add a unit, a bedroom, a bathroom?
Nice.
And it adds so much value in him being a GC. Like it's definitely an advantage for us, but
you're an agent and a GC. That's not fair. Stop it. That's like Superman and Wonder Woman, man. That's crazy. That's a great team.
It has been good, but yeah, I mean, like every property we go into, it's like, how can we create this? How can we make this a deal? Like if it's an area we really like, it's like, what do we need to do to make this a deal? Like you can't force numbers and like, be unrealistic on rents, but is there unfinished basement? Is there unfinished attic?
Yes.
Is there a huge living room that they really don't need that big, and you'd be better off putting a bedroom, building
bedroom.
a wall,
Yes.
and making a bedroom. So like,
Love that.
that's definitely what we've really been able to grow, and why we've been able to get such good cash flow out of our properties, because every property, it's like, what do we need to do to add value to this to generate more income out of it?
Yeah, I've got to tell you, a GC licensed agent combination is like, seriously, it's like Superman and Wonder Woman. It is the perfect thing, because you can look for those things. Like, one of the biggest things I did in, I don't know what this was, 2005, is I found all the 2-bedroom, 1-bath homes that were 1,000 square feet. Why? Because I wanted to see if I could add a 3rd bedroom, right? Buy it as a 2, rent it as a 3. It was magical. No homeowners wanted a 2, so I had no competition. But bingo bango, for $1,500, it was a 3-bedroom.
Yeah.
I think a lot of the audience, maybe some people that are listening, I hear this a lot. People say, "Oh, well, you know how to do that," and I'm like, I didn't start out knowing how to do that.
Yeah.
And I didn't start out naturally wanting to do this. This took a lot of time for me to kind of figure out to take that course of action. And we're guilty.
Well, let's be clear. I personally have never added a wall, never hung a door. I did paint one unit. It was a disaster. I will never do that again. So I am not that guy. But yeah, it doesn't take a long time to go, like, how many square feet is this? What's the minimum bedroom size? Where could I put a door? Is there egress? Meaning, is there an exit in case of a fire? It doesn't take that long to visualize. Even I can do that. I'm a horrible layout guy. I'm like, I remember the first one I did, I was like a living room and a dining room connected. I'm like, there was already 2 entries to the kitchen. Why don't I just close this one, add a door, bingo bango, 3rd bedroom? It was simple, crazy.
Yeah. There's so many avenues and so many ways to do things. That's what's fun about real estate.
Absolutely. Again, you guys are doing so many of the right things. I just want to encourage you to keep going. If I'm right about the buyer's market, it will continue into next year if rates stay at 7. We don't care about cost of capital because, again, everybody pays that. So again, the motivated sellers will start raising their hands. I think there's a lot of people holding out for the election. Good news, the election's over in like 9 days or something. So we'll get through the end of the year and we'll see what the spring brings. But I think you guys are set up to do some pretty amazing things in 2025. So I encourage you to keep going.
Thank you.
Awesome. If somebody wanted to reach out to you and learn about Salt Lake, maybe buy, sell a home, or maybe get some GC work done, how do they find you guys?
They can follow me on Instagram, More Doors with Lisa.
That's a great one. More Doors. That's awesome. More Doors.
MORE.
Yeah.
Yeah, there it is.
Or visit our website, More Life Capital, and I'd be happy to, you can set up a call on there. I'd be more than happy to hop on a call. And that's one of my things, is I try and connect with at least one person every week and hop on a call and do, whether that's, somebody that I'm looking to help or somebody that can help me. But if I can get on a call, and I'm not good at this, like this is like a big, like, okay, I can do this, but like, for whatever reason, it's not my strength. But every week I'm like, okay, if I can get one call in, I'll be happy and network with somebody and build a relationship.
Well, I didn't plan to do this. I don't normally do this, but I'm going to ask anyway. Are you 2 planning to come out to our Vegas events, February 15th and 16th, be in a room with 400 other people, or no? Or you don't know yet?
We're hoping.
We've gone back and forth because of some other personal stuff going on.
No problem.
But we lean towards going. One point we had decided, and then
life happens.
Yeah. Well, we're going through IVF right now, so there's time. There's times where we are going to have to be here in Salt Lake.
No, I totally get it.
But if we can make it and there's still VIP tickets available when the time comes, we will.
We all wish you well. Frankly, I want you to be successful. So if that means you don't come, awesome. I want you to enjoy being parents. So
yeah,
I wish you the best of luck at that.
Thanks. But Vegas is an easy drive down for us, so we're hoping to be able to make it. It's on the calendar if we can make it. So.
Well, very, very cool. We'll hope to see you there. We'll hope you'll be pregnant when that comes. That'd be fun, right? Let's just hope for that. All right, Lisa, John, you guys are amazing. Keep going. Again, what is the website?
Morelifecapital.com.
There you go. morelifecapital.com. Reach out, say hi. Lisa, John, you're amazing. Take care.
Thank you.
See ya.